Hi there, Shingirai here again with another update on global current affairs. Coming into this week, I think a couple of themes to look at would be the upcoming US election alongside US fiscal spending and the possible shutdown that we'll be seeing coming up in the UK, and finally central bank policy across developed markets. Some of these factors we've obviously looked at over the past couple of weeks, and this week again we did see significant headwinds for equity markets, and this was evident particularly in the S&P 500 and the Nasdaq 100 hitting correctionary levels. For a market to be in a correction, they would have to be down 10% from a previous peak. So this occurred both for the S&P 500 and the Nasdaq 100, and that would lead us into the third week of headwinds for these equity markets. I think this may be likely driven by a high level of uncertainty within the US, firstly around the upcoming election, as there seems to be no obvious winner in the upcoming presidential election, and it becomes quite difficult for investors and analysts to sort of make a decision around what they would expect in terms of policy and tax reforms. Another issue that has been causing contention in the US market has been the second bout of fiscal stimulus that would be being injected into the economy to support the economy with regards to some of the weakness that we would have experienced during the COVID pandemic. And what's happening here is that it's been quite difficult for a deal to cross to get across both sides of the aisle, the Democrats and the Republicans. So that has been stalling for quite a while now. Moving over to the UK, we see an increase in the COVID number of infections, and estimations from medical experts estimate that the current number of cases should be around 70,000 cases in the UK, and there is a wide expectation that the UK would be going back into shutdown. And the central bank, of course, in the UK, the Bank of England, has also released its meetings from its Monetary Policy Committee meeting, and here they have suggested that they are open again to the idea of negative interest rates, which they have sort of not considered in the past. This would, of course, lead to some pound weakness that we're seeing in today on the back of those minutes being released. And of course, this would be in line with central bank policy across the pond in the United States, where the Fed Chair Jerome Powell has committed to an extended period of lower interest rates, but stopped short of announcing a second round of monetary policy. Adding all these themes in together, today the markets in today's trading, the S&P 500 obviously hasn't opened for trading today, down about 1.16%. Nasdaq down 13% in yesterday's trading. The FTSE 100 is about up 19 basis points, whilst Euro stocks are up 0.52%, largely driven by a rally again in European tech stocks. And then finally, in today's trading, China closed down about 1.29%, whilst gold is slightly weaker but maintaining above $1,900 an ounce, and Brent is maintaining around $41.50 a barrel.